Alex, he can continue to hold on. Our sense is that power generation as a theme is going to play very strongly in the coming year, that is FY23. Not only the volume of throughput, but the tariff rates are expected to go up in the coming 12 months, and I think this should benefit NTPC quite significantly. Power utilities are now being increasingly favored by investors, considering that most of the industrial sectors are now coming back to normal. There is a kind of a pent up demand from other consuming sectors, and therefore I think going forward FY23 should be a lot better compared to last year. So I would suggest him that he should not sell out at the current levels. Probably wait for the next 6 to 12 months. He could get a better risk reward in NTPC.
All right.
I think Sharda Cropchem, both are good companies, but I think in terms of valuation comfort, I think obviously Sharda Cropchem looks better. Their fourth quarter numbers are also very strong, and I would presume that FY23 could be a lot better. But both these companies have a different business model. Sharda Cropchem is a largely outsourcing model, and Sumitomo is a fully integrated player. So I think considering the fact that Sharda Cropchem offers a better risk reward, I would believe that if she can obviously opt for Sharda Cropchem, she could get another 15-16% even from the current odd levels. But overall, this space looks very interesting, and I think any dip here should be used as an opportunity to accumulate such kind of agri stocks in the portfolio. Yeah, I think Alex, considering that Mindtree is now going to be merged into LTI, and I think it's going to be a very solid merger, considering that both the companies would benefit, from their own synergies. I would expect that over the next 2 years, you could see the real impact, in fact, the full impact of this consolidated merger coming out. In fact, the stock has been slightly tipped because after the merger, the stock saw a lot of profit booking. But if the investor has got a 2 year view, then I think he should wait for the merger to culminate, and the benefits of the merger could obviously be realized in the next, say, 12 to 18 months. So continue to hold on, and definitely I believe some better growth can be expected in both FY23 and 24. Yeah, I think clearly competition in the domestic paint market is getting now more and more hotter, and I think Grasim is a very large player. It represents the Aditya Birla Group, and one point which is very important is that they already have a very large presence in the cement and the building product sector. So paints is a natural kind of synergistic product for them. But my sense is at least for the next 12 to 15 months, I don't see any major disruption in the paint market. Market shares for both Asian Paints as well as Berger Paints are unlikely to go down because there's a lot of stickiness with the dealer community, with the customer community to remain invested in the older companies, and obviously product wise also dealers like the existing brands. But over the next, say, 1 to 2 years, it could happen that maybe Berger or Asian Paints could lose a little bit of market share, and it's too premature to say whether these companies could actually face the onslaught of competition quite easily. In fact, they are very strong players in the market. So I would believe that if you have those shares, continue to hold on. There's nothing to worry, at least for the next 6 to 12 months. Thereafter, of course, we'll have to pick and choose how things go forward in the markets.
Okay.
See, I think if you're talking about IRFC, Alex, I think this is a stock which is basically a dividend yield kind of stock. Normally people who don't want to invest in fixed deposits typically go for IRFC because IRFC has got a very stable business model. Their only customer is the Indian Railways. And I think, the company rewards the shareholders with very good dividends. So obviously, my sense is that, probably, if the dividend is significantly higher, he could possibly benefit by way of a dividend deal. But in terms of capital appreciation, a short-term view on this stock is not advisable because typically this business is very lumpy. It's a very simple financing kind of business which IRFC does with the Indian Railways. So longer term, I think definitely you can make money, but in the short term, I don't expect a significant upside. I think largely he could only benefit because of the dividend yield, which probably could be better than a normal fixed deposit rate. So in that perspective, he could possibly do a little bit of dividend stripping, and then he could possibly shift over to some other stock. First of all, Alex, Glenmark Life Sciences is a subsidiary of Glenmark Pharma, and Glenmark is the parent company for Glenmark Life Sciences. I think after the IPO, definitely the stock has underperformed significantly. And I think good news is that the fourth quarter numbers were quite interesting. In fact, both the operating margin as well as the operating EBITDA has improved quite significantly. The company is a large player in APIs as well as CDMO as well as contract research. And our belief is that over the next, say, 12 to 15 months, the company has got a very healthy order book, which should obviously percolate into a better performance for next year. So I think, the investors should be patient enough to hold on. My sense is over the next 12 to 15 months, one could see a significant upside here because valuations are very, very attractive. And most importantly, they are exporting to all the Asian as well as European markets, which makes the business more interesting considering that the rupee has weakened. So export realizations are also going to get better. So I think he should hold on, keep a time frame of at least 12 to 15 months. I think he should definitely not only recover his price but make a decent profit from this stock. I think, Alex, if the investor has got a slightly medium to long term horizon, I think he can hold on. But considering the fact that crude prices have gone up, raw material prices for most of the tire companies have gone up, I think the next 1 or 2 quarters are going to be quite bad. In fact, we've already seen players like CAT, players like MRF show very poor numbers in terms of margins and profits. So I would say that only if he has a 12 to 18 month horizon, please hold on. The good point is that automotive sector is now showing very strong green shoots, and that could obviously help tire companies. So hold on if you have a 12 to 18 month horizon. Definitely the stock should do better. Alex, if you look at the quarter four numbers and the kind of management commentary given by the management post the Q4 numbers, I think very strong business commentary, and I think the numbers were also equally strong. Now, looking at the fact that Tega is a very large infrastructure player in construction EPC, I would believe that definitely this is one company which should do significantly better in the coming 12 months. If the investor has got a time frame of at least 12 to 15 months, what we have been seeing is that despite good fundamental numbers, sometimes stock prices underperform for some time. So I think keep on the patience, and I would suggest that the next 3 4 quarters, if the company's performance is significantly better than last year, you could see significant amount of re-rating even from the current levels. So please hold on and don't lose patience, because normally retail investors get frustrated, if the stocks don't move up. So this is a classic example of a good company, but which is not doing well as far as the stock price is concerned. Would suggest to hold on, and definitely 12 to 15 months onwards, possibly a better risk reward could come